This is Blue Nile Tutorials. Here, we'll break down the entire auditing process step by step, including key elements like the engagement letter. The engagement letter is a formal agreement between the auditor and the client that outlines the scope of the audit, responsibilities, and terms of the engagement. It's the foundation for a clear and professional working relationship. Let's get started. This video will cover the engagement letter. The engagement letter is an agreement that is put in place at the start of the audit process. Once the auditor has concluded the acceptance stage and agrees to continue with or accept a new audit engagement, the engagement letter is prepared. In this video, we must cover the purpose, ISO 210 agreeing the terms of audit engagements, and the contents of an engagement letter. The engagement letter is a way of communicating and agreeing the audit process with the audit client. Its main purpose is to minimize the risk of any misunderstandings between the two parties and reduce the expectation gap. This is the difference between what auditors actually do and what many perceive them to be doing. Explain the audit process and the terms and conditions of the audit engagement, and it acts as a way of both parties accepting the audit process in writing. ISO 210 states that the engagement letter should be prepared, agreed, and signed by both the auditor and the client before any audit work starts. The engagement letter contents should be reviewed every year to ensure it is up to date. Any changes in the engagement would mean the engagement letter should be updated. A new engagement letter is not required every year if changes have not occurred. ISO 210 also outlines the contents of an engagement letter. The main contents should include the objective and scope of the audit, the auditor's responsibilities, the client's management responsibilities, the financial reporting framework, and the form and contents of any reports used. The objective of the audit is to provide sufficient appropriate evidence to form an independent opinion on the financial statements. The scope of the audit is to plan and perform audit procedures to audit the financial statements, including the statement of financial position, the statement of profit and loss, statement of changes in equity, and the statement of cash flows. The auditor's responsibilities are to carry out their audit in accordance with auditing standards. They must plan and perform audit procedures to give reasonable assurance on whether the financial statements show a true and fair view. They must obtain sufficient and appropriate evidence to form an independent opinion, and they must communicate any issues, including any deficiencies found in control systems, to management. The client management responsibilities are to prepare the financial statements properly, following relevant financial reporting standards. Ensure controls are sufficient to ensure the financial statements are free from material misstatements, and to provide the auditor with access to all relevant books and records, and provide information and explanations required. The engagement letter would also include a mention of the financial reporting framework being followed when preparing the financial statements. For example, International Financial Reporting Standards. Throughout the engagement letter, it will mention the form and contents of reports. For example, the formal written audit report at the end of the audit process, or show the audit opinion. Any control deficiencies will also be reported in writing, in the form of the management letter or report to management. In addition, other matters may also be included, for example, confirming the use of experts during the audit engagement, the basis of fees, the reliance of some of the internal auditor's work if appropriate, acknowledgement of any specific regulations relating to the audit, provision of additional services, the limitations of an audit, and the timings of any communications during the audit. If the engagement letter is not reviewed every year, the information within it may be out of date. The auditors may provide additional services not included, or the fee basis may have changed. In addition, if there is not an up-to-date signed copy of an engagement letter, then the auditor has not received confirmation that the management accept their responsibilities. This could cause problems later on in the audit, and without an engagement letter, the audit standard, ISO 210, is not being followed. I hope you found this video useful. Thank you for watching.